to reply. CFO, general managers, and our other general managers of the corporate affairs are also attending. I will give the mic to Mumtaz Sahab to present the report which have already posted on the Pukar and provided to the stock exchange. Mumtaz Sahab, please brief the presentation.
Thank you, sir. Assalamu alaikum to everyone. These are the topics which we will discuss today.
Mumtaz Sahab, 1 minute close, please. Write your all questions in box, so we will take it turn by turn. Thank you. We continue, Mumtaz Sahab.
Thank you. First of all, we will discuss company profile. Nishat Mills Limited is the part of one of the largest and leading business groups in Pakistan. The group maintains a prominent presence across all major sectors of Pakistan economy, with top performing companies in each sectors. This is the list of sectors on the left side of the screen. The group hold asset valued at around rupees 4 trillion. The group directly employs over 54,000 people across all operations. 9 companies of the group are listed on Pakistan Stock Exchange, and total capitalization of these companies was rupees 524 billion as of 30th June 2025. Now, this is the introduction about Nishat Mills Limited, which is flagship company of the Nishat Group. The company started its business as a partnership firm in 1951. It was incorporated as a private limited company in 1959. The company was listed on Karachi Stock Exchange in 1961. The Karachi Stock Exchange is now called Pakistan Stock Exchange. The company has celebrated its golden jubilee of listing in 2011. Nishat Mills has the longest textile value chain of textile manufacturing that includes spinning, weaving, dyeing, printing, stitching, garments, and towel manufacturing. The company operates 37 manufacturing units, which includes 8 power plants. Total assets of the company are rupees 265 billion. The company employs around 25,000 people, which is nearly half of the total employment the Nishat Group provides in Pakistan. This is why the Nishat Mill creates a positive perception about the Nishat Group. And this is truly the flagship company of the group. This is the market-wise sales breakup of Nishat Mills Limited. The company operates in the various markets, almost on all continents of the world. Our direct export is 54%, and if we include our indirect export as well, then the total exports are around 70%. So this is truly an export-oriented unit. This is the product-wise sales breakup of Nishat Mill. Around 50% of the products are value-added. Now let's have small brief about the business divisions of the company. Spinning segment has 223,000 spindles and 10,320 rotors. Weaving division has 931 looms Dyeing as four thermosol dyeing machines. Denim, which is a new division and inaugurated in 2025, financial year 2025. It has one rope dyeing machine and 98 looms. Workwear division, which is also a new division, and it was also inaugurated in financial year 2025. It has one thermosol dyeing machine. Home textile division has two thermosol dyeing machine, four rotary printing machine, 11 digital printing machine, and 2012 stitching machine. So it is a huge setup. Terry division, this has 76 looms, 11 dyeing machines, two finishing machines, two slitting and 10 long hemming machines, and 202 stitching machines. Garment division has around 3,000 stitching machines. As I have already told that we have 8 power plants. So the total installed capacity of these power plant is 181 megawatt. 38 megawatt is of solar renewable energy. 46 megawatt operates on gas. 7 megawatt diesel, 11 megawatt furnace oil, and 79 megawatt on dual or tri-fuel engines. We have also obtained sanction load from the WAPTA, which is 51 megawatt. Now let's discuss strategic and operational developments which are expected to take place in the next financial year. Energy, high energy cost is a cause of concern and will continue pose problem for us. That's why we have invested in renewable energy. We have invested 38 megawatts solar projects, and around 4 megawatt are still in CWIP, our planning stages. We have planned to invest in 45 TPH biomass steam boiler, and as well as battery storage infrastructure. Then we also plan to enhance the capacity of our open and yarn production by 3,000 rotors. As you have seen, around 10,000 already we have, and 3,000 will be added more. We plan over another. I just told you that we have set up a workwear garments workwear unit, and it was commissioned into production in financial year 2025. To fully utilize its potential, our management is considering to set up a workwear garment manufacturing unit. It will be a pilot project. During the next year, we further plan to invest in Nishat Dairy Limited. Shareholders of the company have already gave us approval to invest 5 billion up to 5 billion rupees, and we have already invested 3.9 billion rupees up to June 2025. Considering the potential of dairy business, the company may invest further into Nishat Dairy Limited. Now let us discuss summary of profit or loss count. First, the revenue of the company has increased 160 billion in financial year 2024 to 178 billion. That is a huge increase of 18 billion, which means 11% increase in financial year 25 as compared to 2024. As a result, the gross profit has increased from 17 billion to 20 billion, an increase of 2.7 billion, which is 15.59 billion increase. Other major discussion points are distribution and admin cost, which has increased from 9 billion to 10 billion. The increase of 1.8 billion, the major increase was freight and commission cost. Freight cost increased by around 920 million, and commission to selling agent increased 30 million. The reason of the reason for this increase was phenomenal increase of sale and Red Sea crisis, which exponentially increased the freight cost. Other major change was decrease in other income. Other income decreased from 13 billion to 10 billion. The decrease was of 3 billion. The major decrease was dividend income. In dividend income, which decreased by 960 million, and in decrease in interest income from subsidiary company, which decreased by 1.7 billion from 2.6 billion in financial year 2024 to 946 million in financial year 2025. On the positive side, finance cost decreased by 2 billion from 10 billion to 8 billion on account of better financial management and decrease in borrowing cost rate. Finally, we arrived at the profit after taxation of 6 billion, which has decreased by 355 million from 6.3 billion to 6 billion, mainly because of heavy taxation. In fact, the regressive taxation, imposition of super tax. Our EPS has decreased by 1 rupee per share. This is the reconciliation of profit after tax. In June 2024, profit after tax was 6.3 billion. The positive impact of increase in sale was 1.9 billion. Then the positive impact of gross profit percentage was 765 million. On the other hand, operating costs such as distribution, admin, and other expenses increased, and this has had negative impact on the profitability. Other income, as discussed earlier, decreased by 3 billion, and this decrease has negative impact. Finance cost increased by 2 billion. Finance cost decreased and it had a positive impact of 2 billion. Provision for tax decreased by 300 million. So we closed the year on 6 billion. Now let us discuss financial position of the company. This is a comparison of the 30th June 2024 and 30th June 2025. Shareholders' equity increased from around 115 billion to 145 billion. Main reason for this increase was, of course, profit after tax of 6 billion and 25 billion that came from other comprehensive income. This 25 billion is majorly from unrealized gain on the long-term investment, 28 billion, and deferred tax of around 5 billion, 4 or 5 billion. So the net impact was 25 billion, 24.83 billion around. And then there was decrease of 1 billion, which we paid as dividend to the shareholders. Then the non-current liabilities. Non-current liabilities increased from 28.9 billion to 36 billion, mainly on account of increase in deferred tax liabilities of 5 billion. Current liabilities increased from 73 billion to 84 billion. The major reason of this increase was increase in short-term borrowings from 49.7 billion to 60 billion. That was an increase of 10.49 billion. On the asset side, first, the non-current assets increased from 128 billion to 160 billion. The major increase was increase in property, plant, and equipment of 1.57 billion and long-term investment of around 27.67 billion, which includes the unrealized gain and further investment and some disposals. Impact of disposal. Current assets increased from 88.7 billion to 104 billion. The major reason was increase in stock in trade, that increased 14.16 billion, but sale tax receivable decreased by 2.2 billion. Now let's discuss financial highlights of the company for the last 5 years. First, we will discuss revenue. Revenue has steadily increased over the last 5 years. It has increased 71 billion in 2021 to 178 billion. That was a significant increase of 149% over the 5 years. Gross profit also recorded a story of persistent growth over the 5 years. Although a dip in the last financial year, it has increased by 11 billion from 2021 to 2025, an increase of 115%. Other income has always remained a major contributor to the profitability of the company. It has increased by 6.3 billion, rupees 6.3 billion from 2021 to 2025, an increase of 175%. Now, the major part of other income is dividend income. It has increased from 2.7 billion to rupees 7.5 billion over the last 5 years. The growth was around 175%. Profit before taxation and levy has also increased from 7 billion to 10.7 billion over the last 5 years. It has remained steady during the last 2 years, that is 2024 and 2025. And the same goes with profit after tax. Despite the heavy taxation imposed by the government, the company has been able to sustain its profitability. EBITDA of the company has increased from 11 billion to 23.7 billion. That was increase of 12.63 billion. The growth percentage was 113.40%. EBITDA to sale percentage has slightly decreased, but the company has been able to maintain it over the years. Considering the fact that during the last 2 years, textile industry in Pakistan is on survival mode. This is the investment portfolio of the company. The cost of investment to date is around rupees 33 billion. The market value or fair value of the investment is rupees 94 billion, which shows a potential positive cash flows which company may have. And most of these are strategic investment and a source of dividend, which is reflected in this slide. Every category, whether it is subsidiary company, associated or related party, has been paying us dividend consistently. Total asset of the company also told us a story of growth. The asset of the company have increased from 131 billion to 265 billion, a steady growth of 102%. Similarly, shareholders' equity has also increased from 86 billion to 145 billion. This is the comparison of earning per shares and dividend per share. Company has steadily paid dividend over the years. This is a comparison of breakup value and market value. Both the values have significantly increased in financial year 2025. The current year slightly decreased over the last 4 years, but improved in 2025. And it is worth noting that it is far better than industry average. This is the reflection of healthy liquidity of the company. Quick ratio has slightly decreased, and this is due to the built up of cotton stock that company needed to support its sale during the financial year 2025. Dividend payout and dividend yield has both the ratios have decreased slightly over the last 5 years because the company was reinvesting for growth in the interest of the shareholders. Price earning ratio has rebounded in 2025 after going down during the last 3 years. It reflects investors' confidence in the earning potential of the company. The gearing ratio shows a rising trend from 2021 to 2023, increasing from 27.97% to a peak of 40.77%. That was a period when the company was making strategic investment to enhance its production capacities. Now the ratio has improved in 2025. It has declined to 38.08%. Now let's discuss future outlook. The textile industry will continue to face elevated electricity and gas tariffs that are significantly higher than those of regional competitors like Bangladesh, India, and Vietnam. The company, in order to mitigate the adverse impact of high energy cost and to remain competitive in international market, has already invested and further plan to invest in renewable energy sources, as we have already discussed. Interest rates are still very high, making the capital for modernization and working capital inaccessible or expensive. Now the company's focus is on better utilization of internally generated funds by improving its financial management. Now the other major challenge is availability of local raw cotton. As you know, Pakistan was once a cotton surplus nation, but now faces a deficit of around 4 to 5 million bales annually due to structural problem in our agriculture sector. This has posed a significant risk for working capital management of the company. The company has planned to mitigate this risk by procuring the mix of local and imported cotton. These three were major issues that the company expects to face in future. There are many other, and one of them is high taxation. Now, question and answer session has started. Our Chief Financial Officer, Muhammad Azam Saab, and Director Corporate Strategy, Salman Hafiz Saab, are here to take your questions.
Very comprehensive presentation covering all the information about the company. We will take the question one by one. Azam Saab, please take from Fuzil Saab. I would like to commend the management for achieving a 3.6% revenue growth in such a hostile global environment. That resilience is notable. All our reports indicate US tariff on our textiles has hit 59%, 11% base plus. Indicators like Gul Ahmad have export segment due to
Beyond the major competitor like William exiled from the export segment due to which is specific you are modeling your US government in Q2 segment और ये सर ये दे दें इसका वर्कवेयर के बारे में कह रहे हैं वी आर ऑब्जर्विंग इतना ही आप कहते हैं यूएस सेगमेंट है
उनसे ले लें।
First question is regarding the expansion in the government sector. In this field, we are going into the workwear garments, which have more potential than the garments like in bed sheets and home and wearing aprons. So this is the reason we are going into this. In workwear, we have made denim plant and also workwear machines for this, and now we are building a stitching section for this because it will generate more revenue and more profit. This is the reason. The next question two.
Sir, मैं ऊंची बात बोल रहा हूँ. The next question is we appreciate from Mohammed Nabil. Again, we appreciate the group's proactive cooperation with the government on the IPP renegotiations. However, with the shift to the hybrid take and pay model effective November 2024, we understand that 65% of our return on equity is now contingent on actual power dispatch. Considering the company's surplus generation capacity, what dispatch level is management budgeting for 2026 to justify the dividend projections? If dispatch remain near zero, have you calculated the impact of NML's bottom line? I think this question relates to Nishat Power or Lalbir Power companies. So I think, Chauhan Sahab, would you like to say something about it?
Yeah, Lalbir no more on the contract with the government. Only Nishat Power and Nishat Junior Power is on the contract, and we hope we will be able to give the dividend regularly as per the history of the company. Particularly, it is related to the power dispatch to the government. So I think we have no such idea. The board of the power companies will decide it how to do it with. We expect dividend as per history of the companies. Moreover, the companies have sufficient cash in their hands and they are able to pay the dividends. They are also looking for the further investments to earn the other incomes other than their dispatch of electricity to the government.
The next question is also from Mohammed Nabil. The investment in 47 high-speed looms demonstrates a strong long-term commitment to efficiency. But looking at the balance sheet, we are carrying rupees 64.8 billion stock in trade, is historically high figure relative to sales. With the shift to expensive imported cotton due to the local crop failure and global yarn demand remains sluggish, does this inventory reflect current net realizable value? Are we at risk of a significant inventory write-off in Q2 with global yarn prices fail to recover? I don't think that we have to write off the inventory to net realizable value because the current price in Pakistan is quite low. Salman sir, will you add something to this question?
Thank you, Mumtaz sir. And on top, all inventory which we carry normally, starting from our cotton, going up to raw material or the finished goods, mostly primarily 70-80% of all those inventory items are based on order which we have in our books. So, as Mumtaz sir explaining that the cotton prices are completely hedged in terms of Pakistan and global market. So I don't think so there is any net realizable impact going to be having on this inventory which we are carrying on our balance sheet. So probably it will give us maybe a positive side if that there is some movement in dollar parity going forward.
The next question is, it is encouraging to see the finance cost decrease this quarter. Yet our consolidated short-term borrowings remain at staggering rupees 61.4 billion, which is nearly equal to our entire inventory value. With the other income stream from IPPs becoming volatile under the hybrid model, why has not the company moved more aggressively to deleverage the balance sheet? Are we locking in fixed rate? Are we exposed to future rate volatility on the massive 61 billion float? Yes, Salman Sab.
In this case, our finance cost is much lesser than the market. Average cost is around 7% in this month. So our cost is not higher than the market value.
I think the portfolio of all these debts which we are carrying are very efficient. Our finance and treasury team are handling all these loan portfolio in a very good manner. That's why our weighted average finance cost is hovering around 7.5%, which is much lesser than the market base rate. So I think historically our financial cost has been in a very good range. So we are very confident that we will maintain this parity going forward as well. And on top, our working capital management is also very pristine, and we have been looking and investing into all our current assets in a very precise manner, without kind of investing too much heavy on raw materials and WIPs and finished goods. So I think if you compare our balance sheet with other companies, I think our working capital management is quite comprehensive and good.
The next question is from Hassan Raza, Maple Leaf Capital. How do you expect your textile operations to perform in financial year 26? And what are your sales and margin targets for the year?
I think 2026, I think it will be reflection of 2025 as well, because globally, if we look at the overall discretionary spending from the consumer side, it is and it has been under stress for the last 2 years, because there's a lot of inflation globally and people are not spending too much on apparel and the fashion side of their monthly income. So yes, there will be some challenge globally, and there will be price war, there will be cost competitiveness, and your company is very cognizant of this fact, and we have been very carefully watching and trying to reduce our cost factors. We are trying to lean our working capital cycles. We are trying to venture into new markets, new product categories. So that's why we are trying to create certain value levers which will enhance value of your organization and the company and the shares. So we are very cognizant of this fact. But your question, 26, I think this is going to be same as we had in 2025.
Very good question.
Thank. Next question is, what was your total power consumption, fuel mix, and average unit cost in financial year 2025?
In last year, we have coal base and solar. Coal and bio is 10%, solar is 7%, and balance 83% is the WABDA, furnace oil or gas, whichever is cheaper. Or this is almost the same mix in last year. 83 items WABDA, furnace oil or gas, 7% is solar, or 10% coal and biomass. Here is the mix.
The next question from Hassan Raza. Have you completed your local cotton procurement for the year, and what was the average cost, sir?
The local cotton is, I think, in progress, and it will end. Mostly it will be completed by end of the February. cost is not, average cost is not worked out till now. And that will be completed in February. Or it is also a business secret, cannot be disclosed in this stage.
The next question is from Zaid Mohyuddin from Lucky Investment. What is the company's local and imported cotton mix?
Imported 30.
Yeah, yes, 30%.
Our imported cotton mix is around 30% and balance is local market.
Next question is from Muhammad Shahzeb. Please share the potential of dairy segment. There is a huge potential of dairy sector. I just let you know that Sutas Dairy Limited, in which we are planning to further invest. The total sale for the last financial year was around 2 billion, and during these 6 years, their financial year ends on December. So during these 6 years, starting from January to June 25, the total sale was 1.7 billion. So this was half of the annual sale. So there is a huge potential of dairy segment. The next question is, what is the average ROE of this business in last 3 years? It is a private limited company, and it is an insider information there, therefore we cannot disclose it here. Next question is, how much company has invested in this company till now? The company has invested in this company around 3.9 billion. The next question is,
1 minute hold.
Yes, sir.
So I requested Maqsood Saab to join, and he has joined the meeting. If there is any question relating to him, you can pass the question to him.
Regarding cotton or
Cotton and market,
yeah.
Okay.
Okay, sir. The next question is from Fuzail Shoaib. What is the percentage of local and imported cotton in the cotton mix? Sir.
Approximately 70% is this year is a domestic cotton and 30% is an imported cotton. But generally, it all depends upon the prices, prevailing prices. This year, the prices of the domestic cotton is more feasible. So the blend will be around this 70-30. But last year, it was around 60-40.
Next, there are 6 questions from Iram Noor. First of them is, as home textile segment is facing challenges, how do you plan to tackle it? Also, there is this news that tariff may decline to 15% for them, which is the biggest competitor in home textiles. So what's your outlook for this and your plan? Salman Hafiz Saab, please. This is in fact more than one question.
So 15% for them means they are referring to India, or which country they are referring to?
She has not specified it.
Okay. So I think, yes, there has been challenge, and this tariff has really created disruption in the market. But if we talk to the customers, the strategic customers, so they are not just moving away or kind of creating disruption in their supply chains or on these short-term media newses. So I think still, as we speak, customers are protecting their supply chains. They are very specific in terms of changing from one country to another country. But if this tariff delta persists for a longer period of time, then obviously customers are going to move into the cost competitive countries or the economies. So, but as we speak, I think our home textile is performing good. You might have seen our results on annual financial statements. Our home textile segment or processing segment has done good as compared to last year. So as we speak, I think we don't feel any challenge. But yes, if the tariff for India declines further as compared to Pakistan, then there may be a challenge going forward in a season or two.
Our next question is electricity requirement and total power usage. Sir, please.
It is around 500 million unit for annum. 500 million units.
50 megawatt per annum. The next question is cotton ratio of local versus imported, and what is the percentage of cotton used as raw material?
Already replied.
replied.
Outlook on margins for financial year 26 and growth expectation for financial year 26. Export growth target for financial year 26. नहीं.
कि आई थिंक इसमें अगर आप देखें तो जैसे पीछे मुमताज साहब भी रिजल्ट को रिफ्लेक्ट कर रहे थे. So the normalized EBITDA of this company is marginally improving because there are blips in 2 years in 2022 and 2023 because of massive depreciation of rupee versus dollar. So in these two cumulative years, there was 82% depreciation of rupee versus dollar, and that has created a lot of tailwind for the company. If we exclude that, your company is maintaining normalized EBITDA, and we feel despite all these challenges and the price pressures which are stemming out from the global market and the local inflationary pressures, coupled with the increase in minimum wage, successive increase in minimum wages, and elimination of all those subsidies. So your company has been maintaining fairly the EBITDA margin as compared to the sales revenue. And 2026 is not going to be different as compared to last 2 years. So in fact, we are going to have more challenging 2026, but in order to hedge that, we have been focusing, as I explained earlier, on diversity of our product portfolio, and these two new investments which we have ventured into, one is denim and other one is technical textile. So we are going to scale these two up. So in order to mitigate our margin dilution risk. And we are also venturing into different other markets, trying to map our US, Europe, and other markets with the product category in order to generate new business and to protect our profitability.
Our next question is any new market you are entering into?
So I think the new two categories of product we are trying to enter into European market, because if you talk about the technical textile, that technical textile is completely housed, substantially housed in European countries, and also in Taiwan and China. So I think that category of product does have very large potential in terms of profitability and in terms of eliminating our seasonality of the revenues. So we are, through that product, entering into new markets, European markets, and also non-conventional textile markets. And that's why, as Mumtaz explained in our presentation, we are trying to couple that backward verticality with the front-end garment side. So in order to have complete vertical setup, offering our technical fabrics up till workwear garments. So I think this is the segment which will have potential, because Pakistan does not have a lot of capability in this segment. And probably we are the one company which has ventured into in order to hedge our profitability and returns for shareholders. And I think once it scales up, so it will have a lot of positive upsides for the company.
Next question is your dividend income has declined and it has expected that it will decline in near future. And regarding this, as it is your major part of profitability.
So I think this dividend reflects on the overall economy, and I think, as Mumtaz Sahab has already shown the group portfolio, our portfolio is very precisely hedged in terms of different sectors, starting from cotton going up to financial markets. So I think Nishat does hold a very balanced portfolio of investments, and we expect that if some sectors goes down, the other sector may come up to hedge the dilution of that particular sector. And on top, we are also, as I explained earlier, we are also focusing on our core, which is textile for this company. So I think it's going to be juggling with all three, four balls with dividend income, reducing our cost, and increasing our market portfolio, product portfolio, and reducing our kind of investment into short-term working capital lines and reducing our working capital cycle. So just to overall protect our profitability and returns.
Next.
Thanks. The next question is from Kaleem Sheikh, UBL Equity. Sir, what is the outlook of the new uniform segment in terms of utilization, and is there a niche export segment for this, or is it focused on domestic utilization?
I think I've already explained as part of my explanation on technical textile and the front-end garment side. So I think we are focusing on
Exactly, sir.
Next.
Next question is from Hassan Raza. The volumetric sales in value-added segments like processed cloth, made-up sales, dairy products have declined in financial year 2025. Can you comment upon the reason of decline in sales in each segment individually and share the sales outlook of each segment? And please comment upon the margins of each division segment. Salman Sab,
Okay.
please.
So I think
Processed.
So I think let me give an overarching reply of this concept. So there is a concept of revenue growth management. So you can sell your capacity. For example, if you are selling Mercedes, you can sell that Mercedes at a price of Toyota Corolla. So it's not selling your quantity. It has to be sold at a balanced price and balanced margin. So this is what we have been precisely focusing during 2025 in a very cost cutthroat competition model. How to protect our bottom line and profitability by doing some bottom slicing. So for example, if a customer or a product is not contributing to the overall profitability, so what is the purpose of churning into the lines and into the machines? So I think we are having very precise focus on revenue growth management. We are just trying to grow, but profitably grow.
Thanks. Next question is from Munir. The shareholder also would like to be given dividends as the company is growing along with profits, but the dividend is shrinking. Your take on it. The company is growing, but do look on this side too. Salman Sahab.
I think company is I think for the last 2-3 years have been investing on the value drivers of this organization, as I explained earlier. So the two major investments which we have carried on was Denim and the technical textile. I think these are the major value drivers for this organization, and the investment which we have made is very precisely worked out. And I think the rupee invested from shareholder side into that project would be giving much value going forward.
Future. Yes. The next.
Next question is from Hawa Abdul Samad. This question is to Khalid Chauhan Sahab. Can you tell about the Lalpir and Pakchand's buyback of shares? Is the company buying back from the local public or NML's holding?
No. We are buybacking from the general public and other shareholders. NML is not going to sell their holding. We have offered 185 million shares of Pakchan and 100 million shares of Lalpir at a prevailing market rate. And I think R5 has been appointed for this. I hope it will be start buybacking from the Monday or next 1, 2, 3 days.
Yeah.
The next question is from Hassan Raza. The volumes in the garment segment peaked in FY22 at around 10.5 million pieces. And during the financial year 23 to financial year 25 period, the number of garments sold was around 7 to 8.5 million only. Please comment upon the operating and volumetric performance of garment segment and what is the outlook in terms of sales and margins.
So I think
Salman sir, please.
if we talk about 2022, it was the period when the market was very bullish. So we were just coming out from the post-COVID era, and the global market was very bullish. People had a lot of money to spend in, and market was very upbeat. So I think if you look at all the Pakistan or the global supply market, so I think everyone grew at a very phenomenal rate. So we also got that tailwind and the benefit of our marketing effort, which we were carrying out. I think for the last 2-3 years, this value-added sector and the discretionary buying is under bit stress. So despite that fact, our current performance is 8.5 million garments, and our profitability, if we look at the segment reporting, our profitability from the garment segment has improved as compared to our 2024 results. So I think going forward, we are also focusing on developing new customers, developing new markets. Currently, we are very focused in the US market, and we are also trying to venture into our European market. And also, we will leverage our backward verticality of denim by offering premium fabrics and innovative fabrics through our garment full package model. So I think this will improve and further solidify our presence in the market with the customers.
The next question is from Mohammed Nabil. Could you please have a sensitivity analysis included in the next quarterly report showing the impact of zero dispatch Nishat power and tariffs on NML's consolidated earnings per share? The quarterly report is prepared as per the requirements of Companies Act and International Financial Reporting Standards, and the requirement you are mentioning cannot be fulfilled under those frameworks. Next question is from Hassan Raza. The denim division was commissioned in financial year 2025. Please share some details of this segment in terms of capacity and products, and when do you expect this segment to break even, and what is the current utilization of this denim segment? Salman sir.
I think this denim segment, because of its premium product category, it normally takes starting from 18 months to 24 months for developing a sizable customer. So the time lag starting or maybe shaking hand with a customer and then ultimately getting sizable volumes from that customer is almost 2 years. So I think we are on track, and we have been latching on with different global customers based in USA and Europe, and we have capability in place. We have hired the right talent globally. Now we established our USA office, also trying to put up strong teams in Europe. Also, we have put up strong teams, capability teams in our local offices. I think we are on a fair level with all these bigger customers. And currently, we are probably at somewhere between 60 to 70% of our capacity utilization. And I think going forward, once we are successful in terms of offering our full package, I think this is going to have major impact on the profitability and value. But I think it will take certain time because of its premium segment within textile category.
Next question is from Hamad. Could you please comment on the expected sales growth and gross margins for denim and workwear segment?
I did explain.
I think Salman Saab have explained these two segments multiple of times. The next question is from Hassan Raza. In terms of export, which are your top 5 customers and how much of sales exports are made to them? This is public platform, and I think this is not appropriate to disclose this information on this platform. The next question is from Shagufta Irshad. Have you completely stopped using gas-fired captive power plants for textile business since levy is imposed? Sir.
We are using an RNG 9.34% of the consumption. We are using gas 9.34% of our total consumption.
Actually, we are using it as a backup. Where other options are not available, then we use gas. The next question is from Akil NBP Funds. What was the weighted average cost of electricity in financial year 2025, sir?
The financial cost? That is around 7.75%. 7.5 to 8% overall. Long term and short term all.
Next question again from Shagufta Irshad. What are your plans regarding disposal of power plants with the terminated contracts?
It is pertaining to Nishat. This question pertains to Nishat Power, Nishat Chunia, Pakistan, and Lalpit, not with the Nishat Mill Limited.
The next question is from Asad Makbul. Nishat Mill's dividend payout history is very poor, despite of dividends received from MCB in many years, and companies also continuously expanding sales number in quite high. It shows textile business is very good and promising, but for showing profits and distribution profit behavior is different. How you are looking interest of small shareholders, please explain.
Already explained by Malik Saab, na? And also in our board meeting and AGM, we have been explaining what is the reason of low dividend.
The next question is from Akil, again from NBP Funds. Will you guide us about gross margin of spinning, weaving, garments, denim, workwear, and going forward, and particularly during financial year 2026? I think Salman Fisab has already explained it.
It will remain like 25. You can consult segment reporting of annual accounts.
Next question is from Fuzail Shoaib from K-Trade Securities Limited. Please provide more details in terms of technical textile segment, quantifying its impact on revenue for the next 1 to 2 years, also discussing it in terms of local competitors. Already explained by Salman Fisab. Next question is from Shagufta Irshad. Are you planning to delist LPL and Pakistan Power? Khalid Chauhan sir, will you reply?
And we cannot disclose or decide where it is. It is the board of Lalpir and Pakistan who will decide, and will, if there is any, there is no such intention so far from the board, and not the board has discussed any delisting of both companies.
Next question is from Hassan Raza again. Can Salman Saab tell us what sort of overall volumetric growth can we expect from NML given the current market export dynamics in the textile industry? With US tariff, do you think more regional textile exporters from India, China, Vietnam will focus more and direct their exports to EU, which may squeeze margin in EU markets?
I think coming back to your second question, I'll explain it first. Yes, there is pressure, and it is going to be more if the disparity between the tariffs of different economies are more. So I think already we are facing that challenge. So a lot of Bangladeshi suppliers or suppliers from China and Vietnam. So they are pushing their exports towards Europe, and we are having a lot of conversations with our European customers in terms of price rationalization. So we know for fact that this and when this tariff announced, so we were very aware of this fact that the pressure is going to be on European market, and we have already put in place certain mitigants and mitigation strategy, how to deal that and how to handle that pressure in order to protect our profitability. And I think so we are focusing on our export volume and value as well. And we feel that whatever export number we have churned for 2025, so inshallah, we will try to maintain or beat that number for 2026 with our different marketing efforts which are going on different countries.
Cost electricity. 38.
The next question is from Muhammad Imran. Why your shares are trading at very low against book value? Are you planning to buy back?
There is no such planning to buy back, no? Okay.
And why these are trading at low value? This is this reflects the perception of investor. I think if it is up to the investor to value it. Let's come back. Next question is from Jasmine Server. I am requested to answer. Please again, missed due to unclear voice, please. Next year export target, projected Pakistan exports, outlook on gross margin, fuel and power mix and weighted average price, cotton mix, local export. Salman sir, please.
I think there are
Next week.
because of confidentiality part, I think I'm not going to disclose the exact number of next year export. But yes, as I explained earlier, we are trying and putting our best efforts put forward in terms of maintaining and increasing our export in different countries. So I think Pakistani export will remain under pressure going forward. So the one who will focus on full package or high value addition segment will get benefit, and I think the downstream businesses are going to have better benefit, and the upstream businesses will remain in challenge. And I think you must appreciate this fact that despite the fact there is a lot of disruption because of EFS and the global pressure on the prices and the local cost inflation, our upstream businesses have been performing phenomenally well. And a lot of people have closed their spinnings, and still we are operating this segment and running this segment at a fairly good mark.
Written questions have been ended. I will take the question from Farhan Mahmood Saab, please.
अस्सलामु अलैकुम।
वालेकुम अस्सलाम।
ये आप लोगों ने जब अपनी ये प्रेजेंटेशन स्टार्ट की तो उस वक्त बड़ा अच्छा रेशियो एनालिसिस किया था, तो मैं भी एक रेशियो एनालिसिस किया है। तो 2016 में मैंने देखा है कि आपका जो रिटर्न ऑन इक्विटी था वो 6 के 7 के करीब होता था। उस वक्त में अच्छा वक्त था, और हालांकि ये एक रिक्वायर्ड रिटर्न कहीं ज्यादा होता है, 6% था। आज 10 साल आगे आ जाते हैं हम 2016 से, वो जो आपका रिटर्न ऑन इक्विटी है वो 6 भी नहीं रहा है, वो 3 पे आ गया है। तो वैल्यू क्रिएशन के बजाय वैल्यू डिस्ट्रक्शन नहीं हो रही इक्विटी होल्डर के लिए? क्या समझते हैं आपके जो आप री इन्वेस्टमेंट कर रहे हैं अपने बिजनेस में, क्या वो फ्यूटाइल नहीं है, या इससे बेहतर ये नहीं था कि डिविडेंड्स बांट दिए जाते? इस पे आपका कमेंट चाहिए और स्ट्रैटेजी चाहिए कि आइंदा क्या रहेगी फिर वैल्यू क्रिएशन के हवाले से।
देखें, पहले आप हमें थोड़ा सा एक्सप्लेन कर दें कि आपने ये जो रिटर्न ऑन इक्विटी कैलकुलेट किया है, इसमें इन्वेस्टमेंट्स के ऊपर जो अनरियलाइज्ड गेन है वो आपने इसमें इंक्लूड है आपके डिनोमिनेटर में?
जी बिल्कुल इंक्लूडेड है।
तो ये एक मेन वजह है इसकी डिक्रीज की। क्योंकि आपका जो डिनोमिनेटर है वो स्टॉक एक्सचेंज की परफॉर्मेंस की वजह से जो है वो बढ़ता गया। आप काइंडली इसको है ना रिकंसिडर करें, रिकैलकुलेट करके देखें, तो मेरे ख्याल में
इम्प्रूविंग है।
ये
नहीं नहीं,
हमने
मैं
इम्प्रूव किया।
बैलेंस शीट से इक्विटी वैल्यू ले रहे हैं हम आपकी ना, आपकी बैलेंस शीट से इक्विटी वैल्यू ले रहे होते हैं
जी
उसकी
बिल्कुल,
बेस।
उस इक्विटी वैल्यू में अनरियलाइज्ड गेन है 28 बिलियन का। जो 28 बिलियन तो मैं सिर्फ बता रहा हूँ लास्ट ईयर में, अदरवाइज जो है ओवर द ईयर ये कुमुलेट होता रहा ना, तो ये रेशो कैलकुलेट, आप रिकैलकुलेट करके देखें, हमारा जो है रिटर्न इम्प्रूव हुआ है इस पे।
अपनी वर्किंग भेज दें। You can send us working, we will give you the fair figure, na, correct figure. Next question.
नेक्स्ट जी, जैसन सर्वर साहब प्लीज।
जी अस्सलाम वालेकुम जी। जी बंडल ऑफ थैंक्स। उसमें ये था कि सॉरी मैंने लास्ट कुछ चीज़ें उसमें मिस की थी, जैसे मैंने मैसेज में भी, तो मैं सर मैनेजमेंट से एक रिक्वेस्ट करूंगा कि मेरे ये 3-4 क्वेश्चंस हैं, अगर प्लीज थोड़ा सा इसको एड्रेस करके थोड़ा सा राउंड अबाउट एक आंसर, जैसे कि मैंने पूछा कि एक तो मुझे काइंडली ये फ्यूल मिक्स वाला प्लीज बता दीजिएगा, जो फ्यूल मिक्स है 25 में आपका था, काइंडली वो बता दीजिएगा प्लीज।
Fuel mix.
हाँ जी,
Fuel mix आपको ऑलरेडी बताया है
जी
कि
जी, आपका ये उसमें फ्यूल एंड
coal,
पावर मिक्स है ना।
biomass,
जी जी सर,
जी
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 सर,
उसमें
सॉरी सर आवाज
आपको
कट रही,
बताता
कोल
है
कितना है?
coal और biomass is around 10%, solar is 7%,
ठीक है
and balance 83% is
ठीक है
WAPDA,
सर।
furnace oil or RNG, which average
सॉरी
cheaper?
वापडा इज
WAPDA
एक
mean
मिनट,
less को
वापडा
FEX
कितना
को
सर?
ना,
जी सर कितना ये?
only WAPDA is 14%, only WAPDA 14%, furnace oil 58% and RNG 9%. और ये चेंज होता रहता है, जो ही प्राइसेस कम या ज्यादा होती हैं चेंज होती हैं।
अच्छा
लेस्को इज
सॉरी, मैं इसको बस रिपीट
14.71%।
करूंगा, कोल।
दोबारा सुनिए, फर्नेस ऑयल इज 58%,
ठीक है
आरएनजी 9.34,
ठीक है।
वापदा लेस्को फेस्को 14.71,
0.30
सोलर 7.32 and coal and biomass is 10.34.
डन हो
Balance is
गया सर।
diesel
और
and
वेटेज
small.
एवरेज कॉस्ट बता सकते हैं? वेटेड
Cost
एवरेज
almost
कॉस्ट सर?
35 to 30, 35 to 38 तक।
35 to 38 पड़ती है सर। बंडल ऑफ थैंक्स। और सर काइंडली थोड़ा सा ग्रॉस उसमें एक्सपोर्ट्स के बारे में कुछ बता सकते हैं अराउंड अबाउट, उसमें कि करंट ईयर से कितना ग्रो कर सकती है अराउंड अबाउट फिगर सर?
ये ऑलमोस्ट उतनी रहेगी, 5-10% प्लस माइनस कर लें उसमें,
यानी कि 5-10
एज पर
परसेंट के
लास्ट
रेंज
ईयर।
बाउंड में, एज पर लास्ट ईयर इसमें 5 to 10% इंक्रीज आ
जी
सकता है
अच्छा,
इसमें। और सर
जी
पाकिस्तान की
जी।
वैसे एक्सपोर्ट्स क्या देख रहे हैं एज अ ग्रुप?
You already
पाकिस्तान की
explained many
एक्सपोर्ट्स
times that will, in our case, that will remain almost same. To some extent, it will be improving. It will be improving 5 to 10%, inshallah.
अच्छा, इसमें ठीक है, पाकिस्तान की एक्सपोर्ट भी 5-10% इंप्रूव करेंगे, और कंपनी भी एक्सपेक्ट कर
नहीं
रही है कि
हमारी अपनी
5-10%
मिल
निशात
की,
की
मैं
एक्सपोर्ट।
not I am
अच्छा
telling about Nishat mill only, not about
अच्छा
Pakistan.
ठीक, नहीं तो सर पाकिस्तान की ओवरऑल एक्सपोर्ट में एज अ बिग टेक्सटाइल यूनिट आप क्या देखते हैं कि पाकिस्तान की एक्सपोर्ट कितने से कुछ ग्रो कर सकती है, कुछ रफली एक एस्टिमेशन? ऑब्वियसली आप तो अपनी फिजिबिलिटी चीजों में करते होंगे।
देखिए पाकिस्तान की एक्सपोर्ट लास्ट ईयर में 17 बिलियन थी, जबकि टारगेट जो है 25 बिलियन का था। तो ये मैक्रो इकोनॉमिक लेवल के ऊपर आप भी स्टडी कर रहे हैं, हम उसके मतलब कोई आपको फिगर बता नहीं सकते, लेकिन जो टेक्सटाइल के इस वक्त हालात हैं, तो हम जो है वो पूरी टेक्सटाइल इंडस्ट्री जो है वो सर्वाइवल मोड पे है। तो
ठीक है
इसलिए आप कह सकते हैं कि इतनी रहेगी, जिस तरह सीएफओ साहब ने बताया है कि 5-10% इंक्रीज हुई, इससे ज्यादा हम नहीं एक्सपेक्ट कर रहे कि कोई मेजर चेंज आएगी टेक्सटाइल एक्सपोर्ट्स में।
नहीं ठीक, कंपनी वाइज तो 5 से 10% एक्सपोर्ट समझ आती है। ओवरऑल पाकिस्तान की एक्सपोर्ट में भी 5 से 7% तक आप चेंज देखते हैं पाकिस्तान की ओवरऑल एक्सपोर्ट जो है इस,
असल
उसमें
में ये
टेक्सटाइल
आप
की
ज्यादा
एक्सपोर्ट की
बेहतर
बात करें।
समझते होंगे, आपको ज्यादा आइडिया होगा आप।
हम इसका डेफिनेट आंसर नहीं दे सकते ना।
डेफिनेटली यू हैव द बेटर आइडिया ऑफ दिस। आपको आपके पास तो कलेक्ट करते हैं आप पूरे पाकिस्तान का डाटा, तो आपके पास ज़रा बेहतर इसका एस्टिमेट होगा।
ठीक है सर। और सर ग्रॉस मार्जिन कुछ के बारे में करंट लेवल पे रिट्रेट करेंगे?
And there are chances if there is a reduction in electricity energy cost, then the margin will improve.
Marginally improve.
Major cost is energy prices, na? For which the government is trying to reduce it. Yes.
Sir, thank you, sir. Bundle of thanks.
थैंक यू जी अकील साहब, एनपीपी फंड से प्लीज आपका क्वेश्चन कोई रह गया?
अस्सलाम वालेकुम सर। सर आपने जैसे कि कहा ग्रॉस मार्जिन तकरीबन 11% के करीब ही रहेंगे, और अगर इलेक्ट्रिसिटी की प्राइसेस कम हो जाती है जो कि गवर्नमेंट अनाउंस करने वाली है एक एनर्जी पैकेज जिसकी 23 पर यूनिट होगी इंक्रीमेंटल कंजम्पशन से, तो आप सर फिर इसके मार्जिन कहाँ तक एक्सपेक्ट कर रहे हैं?
Energy cost, presently it is 34%, that will come down up to 29%. 29 rupee, 35 to 29 rupee.
ओके ओके। और सर सेकेंडली सेकेंडली सर वाई कंपनी अनाउंस सो मच लो डिविडेंड ऑफ ₹2 पर शेयर? अगर 2015 से 2020 के दरमियान देखा जाए तो 40% डिविडेंड पे आउट होता था, जबकि आपका फिस्कल ईयर 25 में 12% का पे आउट है। सर व्हाट वाज द रीजन ऑफ दिस लो डिविडेंड पे आउट? मतलब ₹2 का पे आउट मैंने लास्ट 15 सालों में भी नहीं देखा।
It has been explained many times. Yeah, due to increasing working capital cost requirement and also for our equity investment in other companies, na, we have no surplus funds, na.
और सर
That are
जी जी
जी
सर, जैसे कि आपने ये कहा कि आपकी जो इलेक्ट्रिसिटी कॉस्ट ₹29 हो जाएगी 35 to 38 रुपीज से, तो सर इसके अंदर स्पिनिंग
जी।
ज्यादा बेनिफिशियरी होगा देखा जाए, इसलिए स्पिनिंग सबसे ज्यादा कंज्यूम करता है इलेक्ट्रिसिटी।
yes, you are right.
सर डेनिम की अगर आप बता सके कब ब्रेक इवन में या प्रॉफिट में आ जाएगा, किस साल आपको लगता है कि प्रॉफिट में आ सकता है ये?
ये पहले मलिक साहब ने आपको एक्सप्लेन किया, that will take 2 years almost, ना. That will take 2 years.
ठीक है, थैंक यू सर।
जी असद मकबूल साहब। I think there is no other question.
No other question.
We are thankful to all the participants of the CBS of Nishat, and thank you to all, and we leaving the CBS. Thank you very much.